Welcome back. Well, a lot of stocks buzzing around from the broader markets, which are managing to hold their head above the water. So we have the mid-cap index, which is up around 0.2% at this point in time. But compare this to the other indices, the Bank Nifty, which is reeling under pressure, down around 0.8% at this point. A lot of the financials are under pressure, especially post their Q3 updates. Case in point would be Bajaj Finance, which is the top loser on the Nifty. But let's focus on a couple of other stocks. OMCs, they're in focus after crude prices have fallen below $80 a barrel. Sonal is here to tell us more about it. Sonal.
Well, yes, it is of course a positive, and that goes without saying that how it'll benefit both the refining and their marketing segment, and also because of the fact that these companies have not gone ahead and cut prices in terms of petrol and diesel, so that gives better headroom in terms of spreads as well. So now second half of FY23 is expected to be much better for first half, and this will lead to a sharp increase in their marketing earnings as well. So ICICI Securities put out some estimates as to what will happen in the second half, because remember the first half was really bad for their marketing segment, losses ranging from 16,500 crore rupees to 28,000 crore rupees, and that is just in their marketing segment. So that is expected to reverse, and they are expected to gain around 13,000 crores to 20,000 crore rupees. That's across the sector. HPCL has the highest exposure to the marketing segment. Around 57% of their EBITDA comes in from there, so it tends to benefit the most. And apart from that, also HPCL is in focus because they forayed into petrochemical business. They will be pre-marketing one of the brand polymers, and the total capacity here will be 9 million tons per annum in terms of what they'll produce there. Additionally, they've also signed an MOU with NTPC Green Energy Limited. This is to foray into the renewable energy space. It'll be related to RTC power, electric mobility, solar wind value chain, and also other aspects of renewable energy. So yes, that also is working well. The stock is up around 1.3%. It has come off from the highs, but still all these three OMCs in the green today.
All right, Sonal, thanks a lot for that. In fact, you spoke about crude oil prices being sub $80 per barrel. Do we have other beneficiaries as a result of that? Yes, Tyre stocks, they are buzzing today as the cost of key inputs like both rubber and crude fall. Sonia joins in with more. Sonia.
Well, thanks a lot for that. As you rightly pointed out, Tyre stocks are doing very well this afternoon. In fact, Apollo Tyres is sitting at a fresh 52-week high. You have others like Balkrishna and Siat that are seeing big moves as well. Now, it's a double positive for them. On one hand, raw material prices are falling. On the other hand, demand has picked up across key segments like passenger vehicles. Now, if you look at raw material prices, as you rightly pointed out, both crude and rubber prices are under pressure. In fact, rubber prices are down 24% from the April 2022 highs, and crude prices are down 10% in just 2 trading sessions. And now crude prices are 40% lower than what we saw way back in June of 2022. Now, crude and rubber together make up 70% of the raw material costs for tires. Hence, there's a big operational benefit over there. Natural rubber itself is just 50% of the overall cost for them. Carbon black is around 14%, and NTCF, which is nylon tire cord fabric, which is used in the construct of tires, that constitutes about 12%. And even within that, both carbon black and the fabric use crude as input. So there is a further positive for these companies. In fact, many of these companies like Apollo Tyres have been showcasing an improvement in margins over the last many quarters, and brokerages believe that it will only get better for them. So Apollo Tyres, for example, in the past 3 quarters has seen an improvement from 11.2% margins in Q4 of FY22 to about 12% in Q2 of FY23, and the expectation is that the margins will further improve. Hence, these stocks are surging today. Back to you.
Okay, all right, Sonia, thanks very much for that. So yes, rubber prices are down over 20% from the levels that we saw in April of last year. Bajaj Finance is the other one which is in focus. This is after they reported third quarter business update post-markets yesterday, and it's clearly disappointed the street. We have Abhishek joining in to tell us more about what the brokerages are making of that.
Well, Ekta, brokerages are not happy with the 27% YOY AUM growth, which they believe is actually below estimate. So customer additions has remained strong is what brokerages are saying, and they are saying that number of loan book is in line with what they had estimated. However, sequentially growth has slowed down given the fact that Q3 is actually a strong quarter for Bajaj Finance due to festivals. So quarter on quarter, the AUM growth of about 14-15% 6% is perhaps the lowest that you are seeing in last 10 years in terms of Q3 over Q2. So either there was some festival impact at the end of Q2 or the company has lost market share is what brokerages are writing. So they see loan growth moderating going ahead. We have Macquarie, who has an underperformance rating and a target price of 5275 per share, while CLSA has a sell rating and the target price is 6,000 per share. Back to you.
Okay, all right. That is about Bajaj Finance. But Abhishek, you're also tracking RBL Bank, which is buzzing again on the third quarter update.
Well, the loan growth that RBL Bank has given in their pro forma business update is perhaps the best that you are seeing in last 3 to 4 years, either on YOY or quarter-on-quarter basis. And along with this, you have the CASA ratio or the low-cost deposit ratio, which is the highest ever that the bank has seen. So deposit growth on a YOY basis at 11% is the best in last 5 quarters. The sequential loan growth or the quarter-on-quarter loan growth is 3%, which is the best in 3 quarters. The loan growth of 14% YOY is the best in last 3 years or 12 quarters, and the loan growth of 5.8% quarter-on-quarter is perhaps the best in last 15 quarters. The CD ratio or the credit to deposit ratio, that's improved both YOY and quarter-on-quarter. So in a rising interest rate scenario, when your CD ratio improves, there are chances that the net interest margin can expand versus the previous quarter. CASA ratio or the low cost deposit ratio, that's an all-time high of 36.6% when compared to 36.2% in the previous quarter. This is unlike peers who have seen a dip in their CASA ratio on a sequential basis. Back to you.
Okay, all right, Abhishek. Thanks very much for that. So that's on RBL Bank. That stock is up around 2.6%. But in an important piece of news, yesterday, the Union Cabinet approved the government's National Green Hydrogen Mission with an initial outlay of 19,700 crores. The mission targets investments worth 8 lakh crore and hydrogen production capacity of 5 million metric tons by 2030. To understand what this could mean for a key player in the space, we did speak with Mohit Bhargav, who's the Chief Executive Officer at NTPC Renewable Energy. Listen in to what he had to say.
That finally we have in place the National Green Hydrogen Mission. In fact, the industry was quite keenly waiting this announcement, and we hope that the framework which has been announced will actually help now kickstart the green hydrogen economy in the country. Yes, timeline was pushed slightly because the people who were involved in the due diligence have, I would say, taken some extra time, and we also needed some time in getting the clearances from the respective states. So that's more or less done. In fact, what has happened in between that, a couple of other people have also evinced interest in joining, so we have also given them clearance to go ahead. We need to keep in mind that the valuation is something, you mentioned a number of 10 times. We definitely hope to get a better number. Multiple question is something which will happen in due course. I mean, we still have to understand how the people are reacting. We have got very good response from quite a few people. So we hope to get a good valuation, up to 20% dilution. So we are not saying it will be total 20%. If we get a valuation which is like hopefully better 10%, we might do 10. And the important thing is we are not looking at only one guy. If one guy gives us the entire stake valuation, the best valuation offer, we go with them. Otherwise, we could do it in more than one. It could be more than one entity also who will be given the stake, depending on whoever gives us the best offer.
Okay, that's the word coming in from NTPC talking about the big green hydrogen opportunity. But for that, we'll slip into a break. Up next, Microsoft CEO Satya Nadella tells CNBC-TV18 that India is an exception in the challenging global scenario, also warns of a difficult 2 years for the tech sector. Excerpts from the conversation follow after this very short break. Stay tuned.